Hi everyone, this is Tommy Lackey with Power Investing, and this is our weekly macro review where we take a look at a top-down view of the markets using momentum and relative strength to see where we went this week and where we might be going in the coming weeks. So let's take a look. Okay, let's get started with our triple play chart as always, but this week we're going to start down on the 65-minute time frame and work our way up. I figured we'd start with the positive, and that's really where most of the positive is on the shortest term time frame. As you can see here, the RSI came down. We came down into pretty deep last week into those lows, and then we had a surge straight out. It was more than just short covering, I think, but that was a lot of it. We just have to see where it goes from here. The good spots from it is that it did push us back into bull range. I'll be very nascent on all three of the majors, as well as above these downtrend lines for the SPY and QQQ. IWM's is a little bit higher, so we got to see about it getting up there. And again, let's not forget this 208, 209 area on the IWM is really the big hurdle that we have to be looking for, but that's for the longer time frames. In the shorter time frames, we're trying to shift into a bull range with a nice thrust off the lows, moving above the MA bands, which is turning up on all three of them. Let's see if we can hold into the first of the week before we get too excited. Moving up to the daily, we want to note, obviously, that we see the divergences very clear on the SPY and on the QQQ, but I've made it a point a couple of times to point out that the IWM was not a divergence on a closing basis. Yes, we did shoot down below those lower area and work our way back up for really strong piercing patterns here on the dailies. But it was not a divergence on the IWM. It was a nice higher RSI low, which is still a positive. Those lines on the 65-minute charts do cross over here into daily. Again, you can kind of see that we're making these small breaks, and after piercing the lows on all three, we close the week back above them. All pretty good positives for the market overall in the very short term. Now on the weekly charts, we can see that they're just now really testing the RSI bull ranges here, even with the difficult markets we've seen. SPY is still above it and turning up above 40 on the RSI, with CFG never even making it to zero yet. QQQ is hard tested the bull range, went down a little bit and then pulled back up this week. CFG had already gone below zero and is starting to diverge. And then IWM was already in it's somewhat of a bear range since it stayed under here for quite a few weeks, and now it's trying to work its way back above 40. So it still, I would say, is the most likely bear range here, but the other two are holding on at this point, and we want to see how far this bounce progresses before we make any big conclusions. On the world rankings, the U.S. equity ETFs are still pretty poorly ranked. Most of the leaders are still the Latin America areas, some Middle East kind of stuff, but you're starting to see those give back a little bit now as oil has starting to get a little more wobbly. Still a positive on the week, but the energy we have been a little skeptical on the last couple of weeks, and we think it might be wanting to take a little bit of a break now that the fighting has started and a lot of the rumors are past. So at this point, we got to see how this plays out. It could certainly continue to show strength. However, if it does pull back, a lot of these oil-dependent nations will also pull back with it. Now, we did a few more sorts just to kind of see what had some performance on the week. Again, Turkey, Poland, Belgium, Greece, United Kingdom, some of these areas from a daily standpoint did well on Friday after the attacks began and all that. But from a weekly standpoint, we're still looking again at quite a few of the European nations are in the top rankings, but they tend to be the ones that are more peripheral, like Belgium, Norway, things like that, if you're getting outside of the Middle East and Latin America. China made a pretty good move from an RS standpoint, up 30 points. A couple I wanted to look at, not in here, but thought I'd mention, was Israel and Australia were a couple that jumped out at me that might be worth taking a glance at here as well if we continue to see some improvement. Now, moving on to the intermarket, we still have leadership in the commodity space with USO and DBC. Still did turn out solid weeks, but with big reversals in the middle of the week. That is something that's worth watching. Again, still positive on the week, so it might have just been a blip. But we did note here that gold and agriculture commodities were not big performers. JJC, so copper wasn't either, even though other industrial metals did very well. The dollar was up a little bit on the week. But as you can see down here, our equity ETFs are still pretty much planted towards the bottom. It is interesting to note that IWM was the biggest mover from a relative strength standpoint on the week, with a 0.65 weekly gain and moving itself up from a 12 to a 44 in this particular list. Moving down to the size and style ETFRS rankings, we can see that it confirms the IWM movement in the intermarket list, showing us here that we've seen small cap value jump up to the top position of everything, and then some micro caps and small cap growth are on top of the growth. We still have a very heavy value to growth tilt in this list, but instead of being mega caps down to small, it's now flipped and the smalls are on top and it's working its way the other way. In fact, growth, large growth, and mega cap growth were the only two that were negative for the week. And I think that's notable and tells us a little bit about where we are in this particular correction. As we move down into the market weight and equal weight and small cap sector review, you can see that there's not a lot of change going on inside here. However, one thing I do want to kind of draw a little attention to is healthcare's improvement this week and over the last month, more so the last couple of weeks. It's still really right in the middle when it comes to the large cap or the market weighted, but when we go down here to the equal weighted, you'll notice that healthcare was our big RS mover for the week, moving up to a 64 from a 45 with a 2.5% gain. And then in the small cap region, it also has moved up 20 points off the bottom and is now at a 40 and a 2.85% returns, week leading from all the small cap sectors. So I think that's worth noting here, and for us to really take a look closer into that sector. And when you go over to the blog, you can see we'll have our equal weight, which we'll look at in a minute, sectors, as well as a few of the subsectors highlighted in one of the lists. As we move over to our universe page, I want to take a look first at the equal weight universe, or the power universe that we calculate ourselves, and how it's looking on the RSI chart. Still obviously in a bear range and below the MA bands here, so that's certainly notable, and it's actually coming right back under the underside of this larger range. So it's got a lot of work and a lot of overhead to deal with, but I wanted to point out here that we had the divergence before. But again, just like with the IWM, we did not have divergences this week, even though we made a much higher low on the RSI, which is a net positive in itself. The actual closing lows were higher as well. So this is not an official divergence. What it really is a divergence to confluence type action, even though it was a very deep back test. But now what we're seeing is the downtrend line is one of the next things, and the bottom of this range that are going to be confluence, that if we can break below that and above that in the MA bands, this could get going and could send the RSI on up to give us at least an RSI range test. If we can get over 60, then obviously we are starting to make some headway here. When we move down into the breadth, it's still pretty, not great. It's still pretty poor. It's still pretty weak. But we are seeing again in here, this end of the week move had some positives. Got us back into new high, new low differential into the positive, although the moving averages are still negative and the 8 did cross below the 30. The moving averages all came down on this one, but it is notable that none of them came down into the lower quadrants. Now, since price didn't close at a new low, okay, it's not a divergence, but it is still something that I want to make sure I'm paying attention to. One of our big negatives of the week was a summation index crossing back down into another sell signal, but it immediately flattened out as the oscillator couldn't stay below zero, closed above it on Friday. And then our breadth thrust here, the final indicator before price down here at the bottom, you can see it made a higher low after it slightly moved into extremes this time. Again, not a divergence, but after already having 3 points down here in the last 3 months, this higher low here, higher than all these others, I think is something that we can potentially build off of. When we move down to the relative comparative charts, you can see here that I just drew some lines against some of these downtrends versus the SPY. It's still in a downtrend, but we had a nice little jump here recently. The universe showing that things are broadening out some here, definitely. We'd like to see it break over that line. Same thing with the QQQ. And then the IWM is actually flattening out, which again shows that the universe itself is starting to perform as good or better than some of the small caps, some of the things like that. Or I'm sorry, on line with the small caps. The small caps are starting to pick up some speed. And whereas the small caps underperformed here, they're starting to do better small and some mid type action here in our universe. Now the equal weight sectors, as I said, they're still energy, then materials, utilities, staples. So somewhat both inflationary and defensive. Financials is interesting because while it did perform okay, about flat for the week, had a strong Friday, so it might be reversing a slow pullback. It's down 27 relative strength points over the last month. So it's something to note to where is this just a pullback in a strong trend when we should be getting strength here in the coming week? Or is this something a little more serious? Could this be telling us that the inflation might be tapering a little bit here? Maybe, maybe not. Let's keep an eye on it and see how this relative strength holds up versus the rest of the markets. Consumer discretionary, communication services really the worst for the week. Took a hit in many of its subsectors, which is what we have down here. The final look, we don't usually take care of this in the macro, but we're going to do the sector in the middle of the week this week, so I'm going to hit on a few of these. Top performing was industrial metals, then regional banks was second for the daily on Friday. So these are our big jumpers. Chemicals was in there. Financials, thrift and mortgage, medical devices. But when we look at the weekly search, it's utilities, healthcare, energy, materials. Okay, so the weekly flips it up a little bit, takes a little more defensive. And then when we go to our actual overall rankings, we still have oil and gas, industrial metals, precious metals. So all very inflationary based type things up here in the top. A lot of energy, aerospace, defense jumps up here, has something to do with the wartime stuff and all of that. But again, the charts are showing strength. Don't just look at the narrative, look at the price. And then hotel and leisure are still strong. However, I did want to note that those were actually negative for this week. So after a lot of strength in the last month, we actually did see a slight pause or pullback here. So that's something worth keeping an eye on as well. So this should get you started. I hope everybody has a terrific week, and I hope we can continue to build on the reversal we saw this week. But there's a lot of things to watch out there. If we don't, we will try to help get some information out. If we do, we will just continue to show the progress as we move. Hope everybody has a great rest of the weekend, and we will talk to you soon.